Is the market going to go up from here, or is it going to dump even further? That is the question that we are going to be answering in this video today. Today, I actually ran a poll on my Instagram, and I asked you guys what you believe if the market is going to pump again, if we're going to go for a V-shaped recovery, or if the market is going to dump even further. And quite interestingly, it seemed that you were equally divided over two camps. 50% of you believe that the market is going to go down even further, and 50% believes that the market is going to rise again. And I'm going to show you some really interesting charts and news updates, which I use to formulate my own conclusions about what will happen next. So yeah, without any further ado, if you like seeing more of these videos, make sure to hit the like button and to subscribe to my channel, because I put a lot of effort in making sure that you guys are well informed during this crisis, so to say. There's a lot of stuff happening in the world, and I want to make sure that you really understand what is going on so that you can make well-informed decisions for yourself and hopefully position yourself to make generational wealth in this market, because crises are the best opportunities to build your wealth. Robert Kiyosaki, author of the book Rich Dad Poor Dad, always says that the rich get richer during times of economic downturn, because they understand that that's the time that you can get into great assets at bargain prices. And let's have a look. Let's see how the market is currently looking. So I am going to be sharing my screen, and we're going to do a little rundown over here. So here we are looking at CoinMarketCap, which in my opinion is one of the easiest sites where you can see all of the charts of all of the coins, all of the price information. And here you see right now, Bitcoin is hovering around 57,000 per Bitcoin. So that is down, what is it? Yeah, that's quite significantly down from where we were previously, around 64,000. But we've already bounced back from the low, which we set, which was around 49,000. So we've gone up quite a bit from the low. And then the question is, are we going to go up from here, or are we going to go down from here? Let's have a look at the Ethereum chart. Ethereum, almost same story. So Ethereum dumped quite hard from almost 3.2K per Ethereum all the way down to 2.3K, and with a bottom at around 2.2K. Now we are at around 2.4K. So Ethereum hasn't really gone up much from the bottom that it put in here on this time frame, on the 7-day time frame. Let's have a look at the Fear and Greed Index. So today, the Fear and Greed Index is around 29. That is showing that the market is still quite fearful, which is crazy, guys, to be honest. We are at 57,000, and there's so much going on. Banks are going to be offering Bitcoin. Countries are buying Bitcoin. The largest wealth managers are getting into Bitcoin. There's so much positive so many positive developments in the market right now, and still the market is fearful. To me, that says that a lot of uneducated people are in the market, which are currently being flushed out. And I'm going to show you some charts and indicators that are also backing up this conclusion. Here is another chart which shows the historical fear and greed in the market. So if we look at the rainbow colored line, we see that almost, last week we saw a fear level which was almost as low as the bottom of the bear market. And during the bottom of the bear market, we saw a lot of stuff go down. Basically, we saw the collapse of Three Arrows Capital, of BlockFi, Celsius, FTX. There was so much drama. Right now, there is not so much drama in the crypto space, for example, I would say, relatively, compared to what we've been through before. But I do see this as something positive, because historically, if you look at the Bitcoin chart, let's zoom out. We usually always see a period of quite significant pain before the next phase of the crypto bull market cycle starts. So this was around March 2020. We saw that the price of Bitcoin dumped from 9K all the way down to 5.2K. That was because we just experienced the yeah, the rumors of COVID-19 and the global lockdown just rippled through the entire world, and everyone feared, and people were panicking. And as a result, Bitcoin also tanked. But a few months later, Bitcoin went on this super parabolic run. So if history repeats itself, we might be going on this next leg of the bull market very soon. And although history often rhymes, it's never a guarantee. Okay, so the fear and greed. So we are at historic low levels this week with so many positive developments in the market right now. Let's have a look at the S&P. So if we look at the S&P, the S&P is also quite down a lot. If we assume this number, we're down almost 6.4% in a very short time window. That was mainly due to many factors, including a potential World War III that was looming around the corner, in a lot of tensions currently that are between Israel and Iran, but also the Japanese cash and carry trade that was unwinding. So if you've been watching my previous video, I explained that Japan had low interest rates, zero or negative interest rate for a very long time. And people borrowed from Japanese banks and used that money, which was basically interest-free, free money, and used that to invest in riskier assets like stocks, bonds, crypto, real estate. And now that the Japanese central bank increased its interest rate, people started to panic and sell off their investments in order to repay their loans. And this caused a massive cascading effect in the financial markets. So this is where it all started. The Nikkei index, a Japanese index for their stock market, is still down almost 14.6%. So that's where a lot of the panic initially started. The fear and greed index in the stock market, again, that's an index that is showing how fearful or greedy people are in the market, is currently at around 19 out of 100, showing that the market, the stock market, is extremely fearful. And if you know me, I'm a big fan of Warren Buffett. And Warren Buffett is one of the best investors in the world. And he's known for this saying, be fearful when others are greedy, and be greedy when others are fearful. And this might be a really great time to go shopping. Okay, so a news update on Japan, on Japan's central bank, recently came out, and it basically stated that the Bank of Japan won't further raise their interest rates when the markets are unstable, because they realize that their interest rates have a huge impact on the global market. So the fact that they're not going to further increase the interest rate is a positive sign for the investor confidence. So people that were in this Japanese cash and carry trade that were panicking are now a little bit more reassured that at least the interest rates won't go up even further. So whereas a week ago, when Japan raised its interest rate, it had the intentions to keep on increasing its interest rate further and further. But they realized that when they do that, they're going to break the financial markets even further. Okay, then this chart, whales are panic buying. Well, you probably have heard of the term panic selling. That's when that's basically what retail investors are doing. When the market is fearful, they just cash out their investments at a loss because they think it's going to drop even further. And the whales, the educated people, the hardcore Bitcoin believers, are panic buying. So they're buying the blood on the streets. And this chart is showing that the Bitcoin supply held by wallets with over 100 to 1,000 Bitcoin only increased during this crash. And that's really great, because normally what we want to see during during the start of a bull market is we want to see that the weak hands, the non-believers, are being flushed out of the market, and that the whales, the believers, the institutions, are basically buying up the largest supply. You see, the retail investors always do the exact opposite of what you should be doing. They're buying when you should be selling, and they're selling when you should be buying. Whereas the institutions, the smart money, they actually understand that you should be aggressively buying during times of crisis. Okay. Big breaking news, Bitcoin whales accumulated over $23 billion of Bitcoin in the last 30 days. Imagine, while a large part of the market is completely panicking, the whales understand that Bitcoin has so much potential to go up from here. If you listen to what Plan B is saying, Plan B even predicts that Bitcoin could go all the way to 800K this bull market cycle. I think that's quite over optimistic, but Bitcoin definitely, if all of these things keep on playing out, has a lot of growth potential from here onwards. Morgan Stanley, large bank, is going to start offering Bitcoin to its clients, so Bitcoin ETFs. So this is going to be one of the first banks that is actively going to ask its financial advisors to offer Bitcoin to its clients. And I believe that Bitcoin is going to be an integral component of every investment portfolio, just like how gold plays a role in the typical model portfolio, or how the S&P 500 plays an important role in the typical model portfolio. So I believe that Bitcoin is going to be normalized, and that Bitcoin or Bitcoin spot ETFs are going to be an essential part of this. And the fact that these banks now want to start offering these products to their customers means that we have new ambassadors. We have a marketing machine that is going to push Bitcoin marketing to the world. And Morgan Stanley is not alone. Wells Fargo is also approving its financial advisors to pitch Bitcoin ETFs. So Wells Fargo is currently managing $1.9 trillion worth of assets. So that is a huge customer base or a huge asset base, which they're going to be upselling Bitcoin products as well. Imagine if only a few % of that goes into Bitcoin. That's already huge and also great for the adoption. Meta Planet, a Japanese publicly traded company, is again issuing more debt to buy Bitcoin. And this is a trend that we're seeing happening. MicroStrategy, Michael Saylor's company, is also borrowing lots of money to buy Bitcoin. Meta Planet, Semler Scientific, like so many of these large publicly traded companies are now aggressively getting into Bitcoin. And I believe with a limited supply of 21 million Bitcoin and an all-time low of Bitcoin on the exchanges, we are soon going to see a big supply crunch, which could drive the prices up of Bitcoin over the long term. Then next, El Salvador, which is one of the first companies that is going quite heavily all in on Bitcoin. So Bitcoin is their legal tender, meaning that you can use Bitcoin as a legal currency to transact with within the country. And El Salvador is buying 1 Bitcoin every day. El Salvador is just a small country, but it is a great case study. And now we're hearing rumors that, the US, for example, not too long ago, we saw presidential candidates, Trump and Kennedy, announce at Bitcoin 2024, a large industry event, announcing that they are also considering to make Bitcoin a strategic reserve asset, meaning that they're not going to sell their Bitcoin and that they're only going to accumulate more. So we might be seeing a bigger trend of countries that are going to hold Bitcoin or buy Bitcoin. Another great development is that the FTX refund is coming soon. So earlier in the bear market, we saw that FTX went bankrupt. Well, they're actually going to repay back many of their creditors, and around $16 billion worth of cash is going to be refunded to creditors. And there's a very big likelihood that a big percentage of this will flow back into the crypto space. Now, let's briefly talk about the election. So in November this year, we will see the US presidential elections. And previously, it was candidate Trump running against Biden. And it looked as if Trump almost won the race. But when Biden basically passed over the responsibility or the position to Kamala Harris, now we're seeing a more equal more equal probability that either one is going to win the elections. And why is this important? Well, in the past few months, Trump has really focused on the crypto audience. So he made very big, bold promises that if he would be elected, that he would ease the regulations in the crypto industry, and that he would make the United States a lot more crypto friendly, which was really embraced by the crypto community. And you saw that when Trump survived the assassination attempt, the market started to rally because they believed that a pro crypto presidential candidate, Trump in this case, would be really great for the price of Bitcoin. However, in this case, there is a little bit more uncertainty around the Bitcoin community. And some believe that if Kamala Harris would be chosen, that it wouldn't be that great for this bull market. So let's see. There's a little bit uncertainty over here, but anyways, we have to see. We need to be patient. But again, the market likes to see certainty. It doesn't really like uncertainty. So this is a factor that could potentially hold the price of Bitcoin down and the crypto market in general as well. Here's a chart of Rekt Capital. So Rekt Capital is a Twitter account. They make really great charts. And in the crypto space, they always have a saying, when in doubt, zoom out. So this chart shows you the previous market cycles, and the blue lines are the Bitcoin halving events. And we just recently experienced this Bitcoin halving event. So we are right here. And if you look at the similarities between the previous market cycles, you see that during this period, right after the halving, the market goes slightly sideways, maybe some red candles, a slight sell-off, and then not too long after that, when we go out of the orange circle, that's when the price of Bitcoin really starts to pump, and we are almost there, guys. Again, history often rhymes, but it's not a guarantee that it will happen again. But we're seeing more and more proof that this might potentially happen. Is it going to happen in the next week? Is it going to happen in the next month? Is it going to happen in the next few years? To be honest, we don't know. There are a lot of contingencies right now that we need to get clarification on. Here we see another chart, which is the hash ribbons indicator. And what is the hash ribbons indicator showing? The hash ribbons indicator is basically a chart that shows periods where miners generally tend to sell their Bitcoin in order to fund their operations. So these red zones are periods where miners are forced to sell their Bitcoin in order to pay their electricity bill. And right now we're seeing that we are in such a red period, or we just came out of such a red period. Now, what does that mean? Usually these red periods signal local bottoms. So if you would have bought during this red period, generally you would have experienced a nice uptrend after that. Again, you would have bought in the red period, the market would have gone up. So these red zones are generally really great buying zones. And this indicator just signaled that it was a great buying opportunity because miners were selling. So that might be an indicator that the market might rally soon. Again, is it going to happen in the next few weeks, next few months? We don't know. Now, talking about the time window in which the markets might go up or might go down, I also want to show the S&P 500. So during COVID times, we saw a dip, a very steep dip during March 2020 when we just heard all of the COVID news. And very shortly after, like literally a few months after, the market was at a new all-time high. In the previous dip around 2022, the market sold off again in December, and it took more than a year to get back to the previous all-time high. Similarly, in 2008, the financial crisis that we experienced, the market sold off, and it took a few years for it to come back. So if we can generalize this, honestly, there is no rule of thumb how quickly the markets will bounce back. It all depends on the elections, all of the social unrest, the potential World War III, what the Bank of Japan is going to do, how big the losses of the people that are in the Japanese cash and carry trade. And let's talk about that as well. So right now we see riots in the UK. We see people on the streets that are armed with knives and machetes. So there's a lot of social unrest right now in the UK. It has gone to the point where the UK government even said that it would arrest citizens for retweets deemed harmful. So UK goes fully dystopian. The government is basically now silencing people and telling them what they can or cannot say. And this is something unheard of in the Western world. We stand for freedom of speech. Everyone should be able to say what they want to say. And now we have governments that are mingling in the social discourse. Yeah, I think that's just insane. We also have an news update that Iran is basically issuing a warning for commercial air carriers to avoid its airspace. This could signal, again, that a big attack on Israel, a retaliation for what has happened earlier, might happen very soon. Which brings me to the following. What is the impact of a potential war on the markets? So I found this very interesting article on LinkedIn. And this article shows the impact of different periods of war on the stock market. And I want to zoom in on the Iraq war. So around 2002, 2003, the Iraq war started. And as soon as the news came out, the stock market tanked. But a few years later, in this case, it took more than a year to recover to the previous all-time high. So short term, a potential war can bring down the markets even further. So we've been talking about many factors that could drive up the price of various assets, in this case, Bitcoin, but also the stock market. But in this case, a potential war could drive the price of Bitcoin down even further on the short term. So this is the Iraq war. And this is the S&P 500 index when Russia invaded Ukraine. So we saw that when Russia invaded Ukraine, for a very short period, the stock market tanked. And when the stock market tanks, usually all markets tend to tank as well. But not much later, the stock market was already at a higher point. So in this case, it was a very rapid recovery. But regardless, if the market goes down over the long term, regardless if the market goes down due to a war, a potential World War III on the short term, over the long term, the market generally tends to go up. And why is this? Because of inflation, because every unit of money tends to become a little bit worth less over time, meaning that the asset that you express in this fiat currency is only becoming worth slightly more over time as the value of money is being eroded. So here in these yellow zones, you see World War I and World War II, which are huge events which destroyed large parts of the world, which had very big economic impacts on many countries and families. But over the long term, the market still went up. So guys, that only shows, and let me wrap this up. So this shows that on the short term, the markets could go down because of a few different reasons, including a World War III that is breaking out, or the escalating of the conflict in the Middle East, which could create even more fears. But the market could also go up in the short term. There is no rule of thumb for how quick a recovery can be, and if there's even going to be a quick recovery. So whether the market goes up, to me, that's a win, because it means that my portfolio is going to be worth more. But if the market goes down, it means that there will be a lot more buying opportunities, which is also a win. So it doesn't really matter if the market goes up or the market goes down from here. In either way, it's a win. But it's only a win if you do take advantage of these great fire sale prices in the market right now. So what is my personal approach? In this market, I'm dollar cost averaging into a bunch of assets that are on my watch list. And I highly recommend you to not only focus on one asset class like crypto or stocks, just build your diversified investment portfolio, because prices within different asset classes can fluctuate from time to time. But by building a diversified investment portfolio, it doesn't matter if one of these asset classes are down. In any case, you'll probably have one asset class that's performing quite well, which is keeping up the overall performance of your investment portfolio. If you liked watching this video, make sure to hit the like button. And if you want to see more videos like this, make sure to subscribe to my channel. And throughout this very turbulent time, I'm going to make sure that I am going to post more frequently to make sure that you make well-informed decisions in this financial market. All right. Hope you enjoyed it. Peace out. See you in the next one.